We're going to get to that in a second, but I'm going to go to Leslie Picker at the NASDAQ. We understand ARM is open for its first trade. What do we know, Leslie?
Yes, ARM is open, currently trading about 10% above that $51 per share pricing. You can see up about 10% as ARM opens for trading. A return to the public markets for ARM. It was taken private back in 2016 by SoftBank. SoftBank did all of the selling in this IPO, selling about 9% of the company at $51 per share, which was at the high end of the range and currently trading up from there. Now, as we've talked about through many IPOs that we've worked on in the past together, Scott, pricing IPOs is more of an art than a science, and a 10% pop is decent. It means you didn't leave too much on the table like you'd see with a doubling of an IPO on the first day of trading, but you also don't want to see the stock price decline. Now, of course, this is just the very start of the opening. We have a long trading day ahead, but right now, opening up about 9.6%. So not too bad for an IPO of this size.
Highly anticipated. You've been reporting all along, right? At least 5 times oversubscribed. You also have a really well-supported deal, Leslie, from customers of ARM who said they were going to buy shares in the IPO. We're talking Apple, Google, NVIDIA, et cetera. So you had a well-supported deal. There's a lot of eyeballs on this to go right. To continue that de-thawing, if you will, of the IPO market.
Yep, you're right. $735 million worth of this float was already claimed by its customers, Apple, NVIDIA, AMD, as you mentioned. The rest of it, worth about $4 billion, that was up for grabs by large institutions. And I'm told in talking to investors that hedge funds got pretty slim allocations in this deal, which is usually a decent sign. But those oversubscription numbers, which were about over 10 times by the time the pricing happened last night, that was largely within the range. You hear oversubscription and you think, oh, there's a lot of demand for this deal. But the key there is at what price. And I'm told that oversubscribed 10 times within the range, which is why you really saw pricing at the high end as opposed to going above, because all of the proceeds from this deal are going to be generated by SoftBank, not ARM itself, because SoftBank is the controlled owner of ARM. So they're the ones generating the proceeds. So again, it kind of goes back to, you don't want to price it too aggressively if your big customers are the ones buying the deal. And you also want to ensure a pretty decent first day of trading, because this is a very large deal. And a lot of people see it as a seminal moment for an IPO market that's really been closed for the better part of 18 months.
Yeah, and the market will judge, I suppose, whether a 10% pop is what people were looking for or expecting, and then what the message is out of that. The other point I want you to comment on is the valuation, which is north of 100 times
yes.
here as well. And there will be questions asked from the people on my panel, and I'll get to them in a moment to find out if they want a piece of this, as to whether it's too expensive because of the lack of growth that we've seen year over year from this company, and where the growth trajectory really is to justify this elevated valuation that some will ascribe it to be.
Yeah, top and bottom lines have been shrinking, Scott, over the first 6 months of the year. Valuation, even at this level, that $51 per share, that's still lower than where SoftBank acquired the stake that it had in ARM that it didn't already own from its own vision fund. That was valued at $64 billion, that transaction back in August. So just last month, this is coming in about $10 billion below that in terms of its IPO pricing. So even at these levels, it is double on a price to historical earnings basis relative to other semiconductor peers. So expensive for a company that's not growing. However, one of the key marketing dynamics here has been just its overall exposure to AI and its part in the transition toward AI and machine learning and all of that computing. They say their chips, or their designs for chips, create more efficiency there, lower power, things that are attractive, especially in this market that has seen such a frenzy around any kind of chip exposed to AI, any company exposed to AI. So that has clearly enabled them to price even at an expensive level relative to peers.
Yeah. All right. Good stuff, Les. We'll come back to you as needed. Thank you, Leslie Picker, following the ARM IPO.